when you say pointless, is that because you think it wouldn't accomplish anything?
Yes.
Yeah, in a nutshell.
In a nutshell. So I don't think actually that the cost of borrowing is really a constraint on activity these days. And that's particularly if you're looking at the economy, the real weakness is for businesses. And so if you look at businesses, the NFIB survey even shows that the little guys are hardly having any problems getting access to credit. It's not the cost of borrowing that's an issue. So if you cut rates further, it's hardly going to really boost growth in that sense.
And it's interesting, Steve, because we talk about, if you go back to the fall when stocks were last at all-time highs, the 10-year was at basically 3.25. We've come all the way down to 2%, okay? And doesn't that, in part because the Fed has reacted to it, so take the rate hikes this year off the table, et cetera, do they need to deliver a rate cut now when that repricing has already worked its way through?
Yeah, I mean, I guess it was Evans, or I can't remember who. There's been so much talk last week who said, maybe it was Bullard, who you have to deliver at some point because the market demands it. And actually, the why that Megan seeks may just be because the market expects it. And
this
it would be
so
too
ridiculous.
It would be too tumultuous or otherwise catastrophic for the Fed not to deliver.
So is that what you think? If they don't cut next week, it could be catastrophic?
It's probably too strong a word, but it would be something the market would have to figure out. And it's Megan asked some very good questions. I didn't realize she was a senior fellow. And I've been paying a lot of attention to her until then, but now that she's a senior
I should have mentioned our senior economics reporter, Steve
at that
Liesman.
level now. Yes. We have to pay good attention to Megan. But I was just going to say that what you cannot find justification for with this rate cut is in the data.
That's Megan. That's the most important point.
Yeah.
This is a Fed that's been arguing it's data dependent. If they talk about the manufacturing data, that's one thing, but it's a part of the economy that's been rammed by trade and tariff issues. It's not necessarily a bellwether in and of itself for the business cycle when something that unique is happening.
Yeah.
The rest of the data, retail sales, the jobs report, I mean, even the inflation numbers have been strong. Even the inflation sentiment readings that they're obsessed with have been a little bit stronger lately.
Yeah, and trade isn't really in the Fed's lane, right? That's not up to them to deal with, and if they wanted to address it, they couldn't. So they shouldn't be trying to. But I think Steve's right, though, that if the Fed doesn't go ahead and cut now, then financial conditions would tighten so much that it would necessitate a Fed's cut. So their communications strategy has been spotty, I would say, and they've kind of painted themselves into this corner. The big risk, I think, is that they go ahead and cut, and actually it doesn't really help that much. And we know that a recession is coming. We don't know when, but it's probably coming in the next couple of years. And so if the Fed's cut...
Right, but they can't cut for something that's probably going to happen in a couple of years. I mean, that's...
No, of course not. But if they cut and it doesn't really do anything, then when we're facing into the next recession, we won't have as many tools and no one will believe in them anyhow.
I thought that
that's really important.
Eric Rosengren was absolutely fascinating on Friday. For anybody who missed his interview with Sarah Isaac, please go check it out. I mean, he came out and said, like the last opportunity before the blackout period, he leaned against everything that we have heard from the rest of the Fed and said an insurance rate cut has a cost, and that cost is financial stability. You can't look at the bond markets and not think they've gotten completely out of whack. Maybe they do need a wake-up call.
If nothing else, Eric may be known as the most sober of Fed officials, and he made a pretty big and important pivot from being pretty on the hawkish side to going to neutral. But the idea of cutting rates is a little bit too far. I would like to understand more that the Fed understands why inflation is undershooting and how cutting interest rates will cause that process to reverse itself.
But that's not even the case they're making. They're basically making a slowdown argument. They're basically saying we will provide this as needed to support the economy.
Well, inflation expectations have fallen pretty significantly. I do think that they're worried about that.
Sure, but it doesn't seem like the main catalyst.
It's the most cogent argument, maybe.
Absolutely.
It may not be the main one, but
it's the best one for sure.
If you had one that you were going to say, well, Steve, why should they cut rates? I'd say, well, this inflation issue is a reason why you might want to adjust interest rates. If you could tell me a couple things, why have negative rates and flat and zero rates in Japan and Europe not created the intended inflation? Why would because what are the sources of the disinflation? Why aren't wages pushing up inflation? If the Fed explained that and then said, okay, and now we're going to do X to address that, the thing that Megan's talking about is really important. If the Fed loses the credibility of the market through this cut, it's pretty
but how much, Megan, how much credibility do they ultimately have if people just kind of know they're cutting because they told us they would? That's the worst reason of all time.
Well, but if it actually did something, so if it were to generate some inflation or we were to see growth improve off the back of it, then I think people would feel like, okay, there was a point to that. If that doesn't happen, and I don't think it probably will, then people will say, well, what's the Fed going to do in the next downturn? They can cut rates, but that obviously doesn't work.